All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. This afternoon, no new signals here on the watch list. If we look at the crossovers that are out there, we have Caterpillar, CSX, Honeywell, Intel, JD, Twilio. CSX is the only one that had a chance, really, to trigger out of this list. There's some other stocks that, if they were a little weaker, would possibly trigger. But CSX is one that had the potential to trigger. It's a very interesting chart. It's the kind of chart where if you want to be a buyer, you just put a stop on today, or you put a sell order on today's open price, and if it breaks above today's open price, you go buy it. And so if you want to short it, right, that's the level you use. So I think it sets up very, very easily from a trade standpoint. But doesn't have a signal here on it. So no new signals to go get into. I'd like to go get into something, but nothing there. As far as the overall market goes, we saw the bottoming volume come in this morning, and I talked about it. The chances of closing below this level are very slim. Saw this huge volume candle right here, over 30K on S&P futures, and we haven't seen this a ton over the last couple months, but when it happens, when it comes in, you never want to say always in the market, but it is just simply rare to see the market close lower than this level. It is not uncommon to see the market rally and push up above the level, but we saw another kind of news blip piece right here. But what makes this one different, or this big sell different, is it wasn't coming after the market kind of cratered, right after it had a really strong trend. Where we see bottoming or topping volumes are after the big moves, and we saw that. Now this only applies to today. This bottoming volume for the day doesn't apply to tomorrow, doesn't apply the rest of the week, but it does tell me this is an interesting level for investors, and one that if it breaks, we may see a few stops set under this level. That could, if they break, we could see some further, selling momentum, but no signs of that here just yet. Obviously those things will come in the coming days here. Okay. So that's the market. No real change in the market vibe either. It's still bullish. We do have a 2-point drop in it, but not enough to change the number itself. If you look at the number of stocks trading above 7-day moving averages, we still have 44%, trading above their 7. If this were that really kind of, all right, market's ready to collapse right now, we would tend to see this number move down into the 120 to 130 area. But we're still well over 200. Obviously, could change. If we start to see this number drift lower tomorrow, I think that's a fairly negative sign there. But as far as the overall internals, they're still holding up. We're not seeing big sector discrepancies or, new high, new lows discrepancies. Something like the NYHL, the number of stocks hitting new highs versus new lows. We still have more stocks hitting new highs today than hitting new lows, right? Even though the market's down significantly. And so it is just one where the breadth remains bullish, and one where it wouldn't take the bulls a lot to, go set a new high here in the market. I probably will not have, a tremendous participation rate, but, to see a few stocks, go hit new highs, including the overall market, would not take much from here. If we see further erosion in the internals, the sell is on. And I do believe we will get some sort of, aggressive sell-off in the month of December, or, maybe beginning of January. It could be a 2 to 3 day type thing. Where it's just boom, 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 like we had, in July? Was that July or June? Here right at the beginning of August, where it's just 4 days basically, boom. To me, the market is in a position where it is highly susceptible to this type of August move, both from seasonality and from the overall chart patterns. That all said, we just don't have any real signs of it being on right here and right now. All right, so challenge going to go into the close here today with cash. There are no upside crossovers here. Well, before I just got on video, maybe something popped up with the market. Yeah, still nothing there on the watch list with an upside crossover. Now, this morning I exited a position. I exited a position on Netflix, and Netflix sold off this morning, was down $10 at one point, and had to move on out and say thank you and take the gain that it gave us, and I moved on out and took it. And it prompted a very good question, that was sent my way, and I titled the video AM versus PM, right? When it comes to the challenge, we don't make a lot of moves in the morning, right? Occasionally exits, right? 1, 2 exits. In fact, most red exits are AM. Micron had a green exit in the AM, a red exit in the AM. And then we had Visa in the morning, was an exit. We had the Netflix here this morning that was an exit in the morning. And the question came in, would it just make more sense to only use the algorithm for afternoon data? Meaning, for example, something like Netflix, right? We can look at Netflix has rallied, $5 off of its lows, right? And it's, it's sitting here off of its lows from this morning. And, should we wait and, make the move here in the afternoon? And it's something that when we were putting the algorithm together and testing and doing a lot of things with it, it's something we looked at aggressively because, is it worth having, 2 different times? We looked at 3 different times during the day. We looked at various times during the day over a 3-year period, and we looked at doing once per day. Right? Here's the conclusion that we came up with. Right? Looking at all the data, yes, there is reason to say, hey, if we go out and instead of making any trade decisions in the morning, we shift them all to the afternoon, we're going to be right more often. And by right, I don't mean a gain versus loss. I mean better price, right? We're going to get better prices for the most part in the afternoon on both entries and exits, okay? It's glaringly obvious in the data, not just because of, stock movement, but also the option pricing, which comes into play. But yet we still have the AM. Why? Well, because when we look at the aggregate of data, we actually have a worse performance only making afternoon trades. And why do you say, well, wait, we're going to be right on or get better pricing on most trades. Well, yeah, most trades. The problem with taking the AM out is that in a market environment that's tame and calm, it's fine. Yeah, take the AM out, not a big deal. But when we get some sort of crashing element come into play, right? Where the market in the morning is one level and it's a completely different level in the afternoon. And I'm not even talking about anything that we've seen so far this year, right? We can go back to, even last year around this time period, right? October, November, December, or, February, March, April of 2018. Right, where, or even January of 2016, right? These aren't super common time periods, but these are areas where the option can go from, a nice value to almost zero, and in that course of time from AM to PM. And so what happens, or what has happened in the data, is that we have seen a lot of options go to zero in that case. Now, one of the things I know about the challenge, and those that follow the challenge, and having talked to many of you, is there's probably nothing I can do that frustrates people more than let an option go to zero. Right? And we've talked about this before, and I simply don't get it. I don't get it. I have options go to zero all the time. It doesn't bother me. It's not something that when playing options, I think is is something that's even a negative, right? Yeah, do I want it to go to zero? No. But if I don't have them go to zero, I may not be taking enough risk, right? And so it's one where I said, okay, for the challenge, let's see, can we take those out, right? Can we take those going to zeros out? And if you followed it, from the inception of the algorithm here, we haven't had a single option trade go to zero or even come close to zero, right? It's still a possibility, but we've put in different things to basically take out any sort of decent probability that it happens, right? Can we get a little better performance if we have some options go to zero? Yeah, we could. It would require a little bit of different option picking and whatnot. But at the same time, I did want to take out that factor. And so, we minimized that factor as best we could. If we go to PM, right, and just PM, not only does the overall performance suffer a little bit, but we do get more trades go to zero. And, that's just something where I look and I say, well, it's not helping the overall performance, and we have more trades go to zero. Okay, not worth the risk there. But please note that, yes, making the decisions, the algorithm decisions in the afternoon, you're going to see more trades actually be better off in that case. It's just the margin of being better off versus that margin of being worse off is very different, right? You'll be better off by a little bit. You could be worse off by a heck of a lot of bit. And, that is, that's one of the reasons why, we have it in this format and why we will continue to do so there with it. So, anyway, it's one of those where obviously, you can decide what you want and, play each trade how you want. I don't have a lot of leeway or flexibility here when it comes down to it, but it's just one. It's just like any trade. Okay, hits levels, moving on out, playing the numbers, playing the odds, and let's face it. Right now, the odds are definitely not in our favor. They have been strongly against us here. During the course of this challenge, it's just frustrating. And I completely understand that frustration, but I also hope you see on the other side of that too. How just a few odds in the favor, how quickly things can roll uphill. Here for the challenge, and hopefully we'll be in that position here sooner than later. Okay, so that's the AM versus kind of that PM debate. When we look, I mentioned earlier different times of the day, right? We have the two optimal times, the more profit optimal times. If we go earlier in the day, it's a lot more susceptible to whipsaws. If we go later in the day, in terms of the PM, option pricing can sometimes improve, but we miss some of the bigger moves, the initiation of some of the bigger moves, and we actually don't get as many signals. So, because, different stocks will just move a little bit too much to give us signals. So, anyway, hopefully that sheds a little light there on that AM versus PM and how that all, plays on out, here when it comes to the challenge. All right. As we go throughout the week, right? We have the beginning of a brand new week, brand new month. So we know we're going to have a lot of economic data. We'll have the U.S. jobs report here on Friday. We're going to have some trade data here on Thursday. We're going to get the ISM non-manufacturing here on Wednesday. ADP number on Wednesday as well. So there's going to be quite a bit of data. Some out of China and and whatnot. And that data is going to be important as far as, this kind of green shoots mentality in the economy. Is there, have we seen this bottoming element in the economy? I believe it was Deutsche Bank this morning came out and said, yes, we've seen it bottom and it's just up from here, basically. And there's a lot of debate about that, and it will be hotly debated going forward. I'm very interested to see investor reaction to the data, to the information that comes out, here this week. I do think investor reaction here today has been logical given everything that has happened, and what has been said and what has gone on. But it's also a warning sign. If we look at the S&P on the first day of a new month, and look when the market is sold off on the first day of a new month, we tend to see, some further downside action. Now, it's not always. We saw it in September, and the market rallied after. We saw it in October, and the market sold off. We saw it in November, the market gap up on the first day, and then just kind of go silent for the next three, and then continue on higher. We saw in August down, and then, further drop. There's a historical tendency in the market to see to see an upside in the market on the first day of a month, but some of that is going away. But what isn't going away? And let's see if we can mark this. Let's get rid of our indicators. I'll show you visually here and let you make your own conclusion out of it. But here we are, first day of a new month, right there. Here we come into November 1st, first day of a new month. Market up, right? And then just kind of this stale. Then we get October, first day of a new month, gapped up and reversed on lower, kind of like what we've had today, where the market was set to gap up and has reversed on lower. Then there was a big gap down and a little chop before a move up. Here in September, first day of a new month, right there, we hit the gap down. And then, market goes higher for the next few days. Here in July, we get the August, we get the sell-off, and then, followed by further selling here in July. Let's keep these marked here. Here in June. Because I want you to see a pattern here with it. There's March. I'll just go back to January. We'll just do this year. Okay. If you look at these first days and what kind of happens, right? Notice here in May, right? Let's go back to April. First day is up. The rest of the month, kind of up. Where do we get the pivot point? Well, it's May. Then May, most of the month is down. Where do we get the pivot point? Beginning of June, most of the month is up. We start July up, and it's kind of a flat month. We start August down, and general trajectory is down until the end of the month. We see a pop back. Here in September, right, we move out of this consolidation and into a nice little upward, but really don't go that much during the month. Here in October, we see, a sharp drop and then, nice trend. Here in November, we see a nice trend, right? So this isn't going to be an always thing, but when we look at the first day of a month here over the course of this year, it has often been a pivot point, an area of either confirming that the uptrend is still going, like right here in February, or hey, you know what? We're going to get a reversal coming, like here in May or June. And I think what you look at today's action, we've talked about some of the warning signs that are out there in the market. I think today's reaction, you just look at it and you go, okay, it's another one of those warning signs, right? Our deer crossing signs are getting a lot more frequent, more than anything. If we come into the AAII sentiment survey, where we can look at, sentiments out there. One of the things that we have seen is that some of the sentiments have shifted here. the bearishness has gone up a little bit, right? As the market pushed into a new high last week, the bearishness went up a little bit, but both the neutral and the bullish went down. A lot of times when we're hitting a top, that bullishness starts to really move on up. And so we're not in a position where it's overly bullish, where you look and you say, well, it just has to go on down. We're in a position very similar to some of the sentiment data that we saw back here in January or February, where the sentiments are just still not overwhelmingly bullish. And one of those situations where, yeah, there's still room to go, to get sentiments to be very off kilter or overwhelming to one side or the other. And that's never a super comfortable feeling, right? I like to be a little more contrarian. I like when we start to see highs come in and everybody's bullish, right? But we're not in that situation. And a lot of times when we're not in that situation, some of the pullbacks can be a little more shallow, and then another move higher. And so it's just one where, okay, you know what? You watch the data, you watch as things kind of come in, and this week I think is going to be a very telling week in terms of that data. And then I do think over the course of the month we're going to have a few kind of bad days, that come into play. And if the data is good, if things are positive, those will get bought up pretty quickly. There'll be nice buy opportunities. But if we do see some of the story erode, those will not see the buyers step in. The buyers will wait until next year, to step in if that's what the story is. So I do think a very important week, not only for the metrics, but for the economic story that comes into play, and just a higher chance of, a pivot here at the beginning of the month shaping up. Thanks for hopping on. Thanks for being with us. Have yourselves a fantastic day, and we will talk to you tomorrow. Take care.